Hey guys, what's up? This is Akanksha and welcome back to my YouTube channel. In this video, I'm going to discuss what is head and shoulder candlestick pattern, inverse head and shoulder candlestick pattern, and how can you use that in a real chart. So watch this video till the end and don't forget to subscribe to my YouTube channel. Let's start with what is head and shoulder candlestick pattern. A head and shoulder pattern is used in technical analysis. It is considered as one of the most reliable trend reversal pattern. It is used to identify a trend change from an uptrend to a downtrend. So now let's see how you can identify the head and shoulder pattern. A head and shoulder pattern has three peaks, where the middle peak is the highest and other two can be of similar height. That means it is formed by a peak, which is a left shoulder, followed by a higher peak, which is a head, and then another lower peak, which is a right shoulder. And when you connect the two lows, then you can get a neckline. The slope of the neckline can be either up or down. A head and shoulder pattern has 5 components or attributes: an uptrend, left shoulder, a head, right shoulder, and neckline. We need both the shoulders and head of the pattern before we can identify the neckline. If this sounds confusing, don't worry, it will make more sense later. So what does a head and shoulder pattern means? The left shoulder forms when the buyers in the market temporarily lose interest. The head forms when the buyer's interest peaks again and then declines to a point near the previous low. The right shoulder forms when the stock price rallies once again but fails to reach its previous high and falls again. The fourth component is the neckline, which is formed by connecting the lows. A head and shoulder pattern shows that the buyers are less active in the market and price failed to make a higher high but instead made a lower high. And when the stock price falls below the neckline, then it's usually a strong indication of trend reversal and it's time to sell your position. Now let's see what is inverse head and shoulder candlestick pattern. As the name suggests, it is basically a head and shoulder chart pattern, but it's upside down. An inverse head and shoulder pattern is also used in technical analysis. This pattern is a trend reversal pattern and it is used to identify a trend change from a downtrend to an uptrend. Now let's see how you can identify the inverse head and shoulder pattern. Inverse head and shoulder pattern has 3 lows or 3 bottoms, where the middle bottom is the lowest and the other two can be of similar height. That means it is formed by a lower low, which is the left shoulder, and it is followed by even lower bottom, which is the head, and another higher low, which is the right shoulder. And when you connect the highest points, then you get the neckline. The slope of the neckline can be either up or down. An inverse head and shoulder pattern has 5 components or attributes: a downtrend, left shoulder, a head, right shoulder, and the neckline. We need both the shoulders and the head of the pattern before we can identify the neckline. So what does an inverse head and shoulder pattern means? The left shoulder forms when the selling pressure in the market is less in a downtrend. The head forms when the selling pressure increases again and then price moves up to a point near the previous high. The right shoulder forms when the stock price declines again but fails to reach its previous low and rallies again. A fourth component is the neckline, which is formed by connecting the two highs. An inverse head and shoulder pattern shows that the sellers are less active in the market and price failed to make a lower low but instead made a higher low. And when the stock price moves above the neckline, it's usually a strong indication of trend reversal and it's time to buy a new position. What I showed you so far are picture perfect head and shoulder patterns. But they won't look this perfect all the time. They will be more messy and they won't follow the pattern exactly, but they will be similar to the pattern. Here is the list of imperfect head and shoulder patterns and imperfect inverse head and shoulder candlestick patterns. These patterns are still valid. The focus of a head and shoulder pattern is a lower high, followed by a lower low, making a downtrend. What I mean is that the imperfections of the pattern don't affect the trend reversal rule. Now let's see few examples of head and shoulder pattern and inverse head and shoulder patterns in a real chart. This is a chart of Tech Mahindra And here you can clearly see the formation of head and shoulder pattern. This is the left shoulder, a head and a right shoulder. And when you connect the two lows, then you get a neckline. And on the right side, when the price breaks the neckline, then it's time to book your profit and sell your stocks. Now let's see another real chart example of head and shoulder pattern. This is a chart of Reliance Industries. As you can see, this is not the perfect head and shoulder pattern. Here you see a small left shoulder, a big head and right shoulder. And when you connect the two lows, then you get the neckline. And when price breaks the neckline, then this is the confirmation of the trend reversal. And it's time to sell your stocks. This is another example of head and shoulder pattern. This is the chart of Bodil Chemicals. In this chart, you can see a big left shoulder, a big head, and a smaller right shoulder. And when you connect the two lows, then you get the neckline. And when the price breaks the neckline, then this is the confirmation of trend reversal and you can sell your stocks. Now let's see a few examples of inverse candlestick pattern. This is the chart of Adani Ports. In this chart, you can see a smaller left shoulder, a big head and the right shoulder. And when you connect the two lows, you get the neckline. And when the price breaks the neckline, then the trend changes from a downtrend to an uptrend. And you can buy new position here. Now let's see another example of inverse head and shoulder pattern. This is the chart of Yes Bank. Here you can see the formation of inverse head and shoulder pattern with a small left shoulder, a big head and right shoulder. And when you connect the two highs, then you get the neckline. And when the price breaks the neckline, then the trend changes from a downtrend to an uptrend. And you can buy new position at this point. This is another example of inverse head and shoulder pattern. This is an IPO and this is a chart of Prince Pipes Fittings. Here you can see the formation of an inverse head and shoulder pattern with small left shoulder, a head and big right shoulder. And when you connect the two highs, then you get the neckline. And when the price breaks the neckline at this point, then this is the confirmation of a trend reversal from a downtrend to an uptrend. And you can buy new position at this point. This is the chart of Yes Bank. This is another example of head and shoulder pattern, but it failed. In this chart, the head and shoulder pattern does not confirm the reversal of the trend. I have added this chart to show you that when you see a head and shoulder pattern, that does not necessarily mean that the trend is going to reverse. You can use different indicators as a confirming signal like moving averages, support and resistance, volume indicator, and different bullish and bearish candlestick patterns to increase the probability of trend reversal. So that was my video, guys. Thank you so much for watching this video. If you like this video, then please give it a big thumbs up and also subscribe to my YouTube channel. I'll see you guys in my next video. Until then, stay safe. Bye-bye.